The way you have to look at this, especially with long-term rates, is that it makes it more expensive for banks to lend money, from the Fed. So any indication that inflation is starting to come in and that rates are going higher really scares the markets immediately. It's funny, we won't see it in the economy for like a year later, but the markets get scared about it right away because it affects every single aspect of a corporation's finances. Maybe they're looking to do new initiatives. That it could also affect salaries. So you have to stay on top of these things if you're a corporation. And people and investors in the market and institutions are responding accordingly. So you got to ask yourself a question. What is your focus and your goals getting into this particular sector? And if your goals and your objectives are longer term in nature, more than 5 years, 10 years in nature, the trend is definitely your friend, we say at this point, because long term, we are talking about the dominators and the innovators of this and many other countries that technology has a foothold in. And it is the future of this society as a whole. Now, that doesn't say that there is not other sectors to go into, like you mentioned, that sector rotation, to make money in the near term. And that could do very well for you. But looking at the tech sector, looking at what has happened in the past, is it just significant pullback? Are we heading into correction territory? Or is this the beginning of a wider sector rotation? And let's just go with the first one. If it is a correction, is it not a buying opportunity right now to go and get high quality names at cheaper prices, or to go into these sector plays, other sectors, consumer cyclicals, durable goods, to go in them at decent prices? Nothing there is overpriced. They have not participated to the extent that these growth tech stocks have gone up. I mean, you see 200, 500% in some cases. The sector rotation that's occurring, they haven't, they're happy to make 20% in a year. They're ecstatic to do that. So this kind of thing, let's put it in perspective. Let's say there is opportunity for people to go into tech. Let the buyer beware. You may be holding on to it for some time. And if you are, time is on your side when it comes to the market. I've said it time once, I'll say it again. Time is on your side the longer you're in. All the experts seem to agree with that kind of mentality. But also be aware that if you want to make money now, there's always a place for you to do so. When we talk about the biotech sector, we at Larrea Wealth, we see more partnerships occurring with the biotech and larger pharmaceutical companies, or the SPACs. You may see different entities created just for that sole purpose. And out of, let's just say, 100 different drugs that are developed, you may have only 10 to 15% of those really becoming household names more than anything. So it's such a small percentage of these biotechs that really take off. You really want to be careful here. You want to be aware, look at the names who are working in conjunction with some of the names you may not have heard of. And there's an opportunity there. But once again, do not go into this area just willy-nilly. You really have to be strategic about it and look for high quality, but at the same time high quality that's partnering with the more speculative type company. And I think that would do well for you going forward. I also believe that this is a very speculative area that you should not have more than 5% of any portfolio in at this particular time, because that could cause more trepidation and anxiety in your portfolio and in yourself. You want to be able to eat lunch and have dinner and be able to sleep. If you go more percentage wise, you may not be able to do that so easily.